Pretty common that we have a question about what car expenses we can deduct. Let's see if we can answer those for you. Hi, Bob Jennings here. Let's talk about deducting our car expenses. You know, to get started, we all have to make sure that we understand there are a couple of requirements that the IRS requires that we keep track of certain things to be able to deduct our automobile. For example, we have to know our total mileage driven on that car during the year. Total mileage, not business mileage, not personal mileage, the total mileage is required. The second requirement is I have to know my business mileage. Now we'll talk about the business mileage in a minute, but you ought to be coming up right now with some thoughts such as, how do I come up with those numbers? Here's a simple rule that I have followed for years and that I recommend everyone follow. On January 1st of every year, from this date forward, in your own personal computer, calendar, record book, or whatever, go out and write down the odometer reading on your car. Why? Because if you know what it was on January 1st every year, you'll know your total mileage during the year. Now, as far as the business mileage, the IRS generally says you have to have some kind of records to prove how much you drove for business. Those records could be as fancy as having an actual automobile log where you write down every trip, or it could be a calendar or some other type of record keeping that will prove the business mileage that you drove. So the real question that we have is, what is business mileage? Well, let's get another idea out of the way. Commuting costs are not deductible. So what the heck is a commuting cost? Driving from where you sleep, which is your residence, to where you work, which is known as your tax home, is generally non-deductible mileage. So when you get up every morning and you drive to work, that's commuting. That is not deductible mileage, okay? I don't care if you drive 1 mile, 10 miles, 100 miles, or even 1,000 miles to work. Driving from where you sleep to where you normally work is considered commuting and is not deductible. However, what if where you sleep is where you work? You work from home. Well, then all of your business-related mileage would be deductible from when you leave home to go out on a business call. Since that's not most Americans, let's get back to our original example. You drive from home, where you sleep, to work, your tax home, non-deductible. Once you're at your tax home, what becomes deductible? What if you're at the office or the job site and you have to go out to a customer's or a client's? That is deductible business mileage, but you need to keep track of it. What if you have to go to the office and you're a salesperson that during the day you make calls to 20 or 30 clients? Well, driving from work to the office is non-deductible, but once you leave the office, all of the mileage that you drive for the remainder of the day for business is deductible. What if you go from home directly to one of your clients? You've made a mistake. Why? Because that's not considered business, that's considered commuting. So driving from home directly to one of your clients is not deductible. Now there is an exception to both of these rules, and that exception is if you have a temporary assignment outside of the metropolitan area where you normally work, then that mileage would be deductible. Let me give you an example. Let's say that you live and normally work in Philadelphia, Pennsylvania. You have a temporary job assignment, however, that for 3 months takes you to Harrisburg, Pennsylvania. So rather than getting up in the morning and driving into the city of Philadelphia, you get up in the morning and drive to Harrisburg. Because that's a temporary assignment of less than a year, you're actually allowed to deduct those commuting costs driving to that temporary job assignment. So let's summarize business-related mileage. Driving from home to work is non-deductible. But once you're at work, business-related mileage is deductible, which would include client calls, going to other offices, even going to a second job from your first job is considered deductible mileage. All right? If you have a temporary assignment away from the metro area where you normally work, you also are allowed to deduct those miles. Okay, so finally, how do we actually deduct our automobile expenses? Now, the IRS gives us one of two methods. We may utilize the actual method or we may utilize the mileage method. In either case, what we do is we make a percentage. What are your business miles during the year divided by your total miles? We then multiply that times either actual costs or mileage rate. As a practical matter, as a practicing CPA, I will tell you for most of us, the mileage method is really better, but let me make sure we understand both. If I want to deduct actual costs, I have to add up during the year all of my gasoline, insurance, repairs, plates, licenses. I have to know the additional cost of the car. I deduct interest. I add all of those costs up. I multiply them times my business percentage, and I'm allowed to deduct that number. Now, don't fall into this trap. You're not allowed to write off your monthly payment on the car, just the interest portion of that payment, not the actual loan repayment. Why? Well, you're already writing the car off itself through depreciation, so to write off the loan would be to write it off twice. So under actual expenses, literally, you have to keep track of every expense on that car. Gas, repairs, insurance, oil, car washes, interest, taxes, plates, everything, and we have to know what you originally paid. We add all of those costs up, multiply them times your business percentage, and that gives you the deduction. Again, in many cases, that's lesser than the mileage rate, and you're generally not allowed, by the way, to flip-flop from one to the other. Your accountant will actually figure this out for you, but let's talk about the mileage method. Now, with the mileage method, you don't have to keep track of hardly anything other than your business mileage. Why? You take your business mileage times the IRS allowed mileage rate, roughly 55 cents a mile, and you write those business miles off. Additionally, you're allowed to write off a percentage of the interest you pay on that car loan and the taxes you pay on that car loan based on the business percentage. So in summary, you write off actual or you write off mileage. In both cases, we need to know the business percentage. That's why you keep the logbook. You then, under the actual method, you got to keep receipts for everything. Under the business method, you don't have to keep those receipts. For further answers, please visit us at the website that you see at the bottom of your screen, or feel free to give us a call. Thank you for listening today, my friends. Bob Jennings signing off.